Imagine this. The IRS owes you $8,046. Not next year, not someday, right now. That money is sitting there waiting for you. All you have to do is file one tax return. But you have not filed because you are scared. You are an immigrant. You heard the IRS is sharing addresses with ICE. You heard that filing taxes puts a target on your back. And so you are leaving $8,000 on the table because of fear. Today, I am going to tell you the truth about what the IRS can and cannot share with immigration enforcement. I'm going to show you exactly how much money you qualify for. And I'm going to give you a step-by-step plan to claim every dollar before the deadline. Because here is the reality. Not filing your taxes is far more dangerous to your immigration case than filing them. Let me start with the money. The biggest credit available to immigrants in 2026 is the Earned Income Tax Credit, known as EITC. This is not a deduction. This is cash back from the IRS deposited directly into your bank account, even if you owe zero in taxes. For the 2025 tax year, which you file in 2026, here are the maximum EITC amounts. If you have no qualifying children, the maximum credit is $649. If you have one qualifying child, the maximum credit is $4,328. If you have two qualifying children, the maximum credit is $7,152. If you have three or more qualifying children, the maximum credit is $8,046. Let me say that number again, $8,046. Cash, deposited into your account. For a family with 3 children, that is rent for 2 or 3 months depending on where you live. Now who qualifies? You must have earned income. That means wages from a job or self-employment income. You must have a valid Social Security number. You must be a U.S. citizen or a resident alien for the entire tax year. Green card holders qualify. People with valid work-authorized visas qualify. If you have been in the United States for at least 183 days in the tax year, you may qualify as a resident alien under the substantial presence test, even without a green card. Here are the income limits for 2025. If you are married filing jointly, your adjusted gross income must be below $68,675. If you are single or head of household, it must be below $61,555. And your investment income must be below $11,950. Now let me add the second credit on top, the Child Tax Credit. For the 2025 tax year, the Child Tax Credit is worth $2,200 per qualifying child. Up to $1,700 of that is refundable, meaning you get it back even if you owe no taxes. Your child must be under 17 at the end of the tax year, must have a valid Social Security number, and must have lived with you for more than half the year. Here is the math that most people miss. These credits stack. If you are a married couple with 3 qualifying children, you could receive up to $8,046 from the EITC plus $6,600 from the Child Tax Credit. That is a combined total of up to $14,646 from one tax return. And there are additional credits you might qualify for. The American Opportunity Tax Credit gives up to $2,500 per eligible student in your household. The Savers Credit gives up to $1,000 if you contributed to a retirement account. The Lifetime Learning Credit gives up to $2,000 for education expenses. Every single one of these is available to immigrants who meet the requirements. Now let me address the fear. In February 2026, a federal judge found that the IRS violated federal privacy law approximately 42,695 times by sharing confidential taxpayer addresses with Immigration and Customs Enforcement. The IRS had disclosed addresses of 47,289 people at ICE's request. 90.3% of those disclosures were ruled illegal. That ruling matters. Multiple federal courts have now intervened. A judge in Massachusetts blocked the IRS from sharing taxpayer addresses with ICE. Another judge found the sharing violated the Internal Revenue Code Section 6103, which specifically protects taxpayer information from being disclosed to other agencies. Here is what this means for you. The courts have ruled that what the IRS did was illegal. Legal protections exist. The IRS is under court orders to stop sharing this data. Filing your tax return in 2026 is legally protected activity. But here's the other side of this. Not filing your taxes creates a much bigger immigration problem than filing them does. If you ever apply for a green card, USCIS will ask for your tax transcripts. If you ever apply for citizenship on Form N-400, USCIS will review your tax history. The good moral character requirement for naturalization specifically includes whether you filed your taxes. Missing tax returns create a gap in your record that USCIS officers flag during interviews. If you are a green card holder with unreported foreign bank accounts, the danger is even greater. If the total value of your foreign accounts exceeded $10,000 at any point during the year, you are required to file an FBAR, which is FinCEN Form 114. The penalty for not filing an FBAR is up to $16,536 per year for non-willful violations. For willful violations, the penalty jumps to $165,353, or 50% of the account balance, whichever is greater. FBAR non-compliance is now being flagged during green card renewals and citizenship applications. USCIS officers are trained to ask about foreign accounts. If you answer yes on your N-400 and you have not filed FBARs, that creates a serious problem for your good moral character determination. Now the deadline. April 15, 2026 was the original federal tax filing deadline. If you missed it, you still have options. You can file Form 4868 to request an automatic 6-month extension, pushing your filing deadline to October 15, 2026. But here is the critical detail. An extension to file is not an extension to pay. If you owe taxes, interest and penalties start accruing from April 15th, even if you have an extension. However, if you are owed a refund, there is no penalty for filing late. The IRS does not penalize you for being late to collect your own money, but you must file within 3 years of the original due date, or you lose the refund permanently. For the 2025 tax year, that means you have until April 15, 2029 to claim your EITC and child tax credit refund. But why would you wait 3 years to collect $8,000 that is yours right now? Here is your 5-step action plan. Step 1. Gather your documents. You need your W-2 from every employer, or your 1099 forms if you are self-employed. You need Social Security numbers for yourself, your spouse, and all qualifying children. You need your prior year tax return if you have one, and you need your bank account and routing number for direct deposit. Step 2. Use free filing options. The IRS Free File program at irs.gov/freefile lets you file your federal return for free if your income is below $84,000. The VITA program, Volunteer Income Tax Assistance, provides free in-person tax preparation at community centers, libraries, and churches across the country. VITA volunteers are IRS certified, and many locations have bilingual staff. To find a VITA site near you, visit irs.gov/VITA. Step 3. Claim every credit you qualify for. Do not leave money on the table. When your return is being prepared, specifically ask about the EITC, the Child Tax Credit, the American Opportunity Tax Credit, and the Savers Credit. 1 in 5 eligible taxpayers does not claim the EITC every year. That is billions of dollars left uncollected. Step 4. File your FBAR if required. If you had foreign bank accounts with a combined value over $10,000 at any point in 2025, file FinCEN Form 114 electronically at bsaefiling.fincen.tres.gov. The FBAR deadline is April 15th, but there is an automatic extension to October 15th. Do not skip this. The penalties for not filing are devastating, and USCIS is now checking. Step 5. Keep copies of everything for at least 7 years. Your filed tax return, all W-2s and 1099s, your FBAR confirmation, and any correspondence from the IRS. These documents become critical if you ever apply for adjustment of status, naturalization, or re-entry after international travel. Let me give you the numbers one more time. EITC maximum with 3 or more children, $8,046. Child tax credit, $2,200 per child with up to $1,700 refundable. Combined potential for a family with 3 children, up to $14,646. FBAR penalty for not filing, up to $16,536 per year. IRS found to have illegally shared 47,289 taxpayer addresses with ICE. Courts have blocked further sharing. Extension deadline, October 15, 2026. The IRS is not your enemy. The IRS is offering you up to $8,046. The only thing standing between you and that money is one tax return. Every day you do not file is a day you are leaving cash on the table and creating a gap in your immigration record that could cost you far more than $8,000 in the future. If this video helped you understand what you qualify for, subscribe to this channel right now. I break down every immigration and tax change that affects your status. Share this video with every immigrant family you know, because most of them do not realize this money exists. Drop a comment and tell me how much you expect your refund to be. This is USA Visa News. File your return, get your money. I will see you in the next one.